Good morning. It's September 25th. Welcome to Critical Point Podcast. Going to give a little commentary this morning, kind of a flash update. We're going to be delayed on doing the normal morning briefs for the grains and the stock market. Our barchart.com quote and chart system seems to be down on the charting side, so nothing to show you. So let's have a little discussion here ahead of the open of the markets. In the stock market, the market dropped into yesterday's low. It would have declined regardless of the news and information unless it was just a shocking bullish news. But it did get a little extra kick from the Fed Reserve saying, yes, should do a second stimulus package. So they're putting the pressure on Congress, and the market made some traders sell, some investors sell, and helped added to that downswing into a level 4 bottom yesterday. Level 4 meaning intra-week swings. The market then recovered somewhat on news that the Democrats are working on a second package of $2.4 trillion. And so that kind of encouraged the market. I think overnight the market slipped on the realization this will take some time, that probably nothing's going to happen to next week or later. And, of course, we have to be concerned of the Republicans shutting off that stimulus package here. So I wasn't pleased with the slippage overnight. If it takes out yesterday's low, I think that's a sign the level 4 swing is down into Monday, maybe even early Tuesday, and that the swing topped overnight. As we zoom in, that was a poor top. It was a lower high compared to less important highs, and it just doesn't quite meet the requirements the way we'd like. So the model is kind of holding out a little bit for recovery here. It's kind of suggesting maybe the cash market will view this as a gap lower opening and they buy to fill the gap, but maybe they then continue to buy, okay? So here's hoping that they actually bounce it, because ideally it should bounce into the close today and place L4 top near the close today, Sunday night to early Monday, and then be down on Monday. So both scenarios are suggesting there will be a wave of selling by Monday. It's just a matter, has it already begun, or is it going to begin after like a Sunday night or early Monday morning top, or does it begin after the close today? Any rate, I think there's a slight chance they should actually buy this and put it back up. On intraday charts, we can see a potential bullish head and shoulders pattern, not much of one. We can see a chance it's creating a double bottom here. All of these are factors that can mean more demand than supply, but it's all just intraday. And again, violation of yesterday's low would throw all of those scenarios out. Okay. Now, as we zoom out, the level 3 bottom is due now, should have been placed yesterday, should be placed this week, but we can't rule out last minute selling early next week. The model is fairly confident on that. I think it's high probability, and I think we just have to respect that the market can bounce next week. But when we zoom out the larger trends, we can see there could be headwinds for rallies, and that a time stop was triggered this week. And that suggests the market may not bottom to mid-October to even early November, but it still leaves on the table an important high in November, suggesting overall the market should try to work higher into November. And it might be actually a decent run higher, okay? And then we'll just assess what we get in November. So to me, I'm asking myself, does one actually be bearish into October, early November, and then bullish for just a couple of weeks, and then back to bearish? Or does one assume that we've seen the lowest price? And that's, this morning, a lot of the chatter is suggesting that the market may be low enough now that we've seen the worst, and that it's turning into bargain hunting time. Yet an analyst over at Citi come out saying this is an opportunity to buy a dip in gold, not an opportunity to buy a dip in stock. So as always, there's both sides, and it is iffy. One thing I'm willing to do subjectively is to go against the model and the time stop and saying it can be wrong. It's met as a nice tool to get us on the right track if something's going wrong, and I probably should respect it. I think it's, for the most part, served very well. It's a good concept or tactic. Yet somehow I can come up with a scenario that the model was wrong and the market took a little bit longer coming down and bottoming later than the model can detect and forecast and signal, and the model is going to be wrong. And the time stop is going to be wrong. So I like this level to try to buy and nibble here. And I think the model is going to be right on a little level 3 bottom now, that it can be higher next week. But I think waiting to mid-October is not the correct thing to do. And I think this market can work higher into November. But we just have to look over his shoulder. I could be making a big mistake here and should respect that time stop, that we now have a scenario when the lows could be lower in the mid-October to early November, yet the highs are supposed to be up in November. That may also signal that the market is just going to be in a trading range till we get the election out of the way. Okay. Technically, I'd watch the market near the 100-day average, at least for the December futures. Seems to be respecting it, but it's also hovering near it. I think the market's too oversold to violate it by a huge amount and to swing on down to the more important 200-day average. So we'll want to watch out for that. On the news side, if we can see any development on a stimulus package, I think the market's going to be bullish and we'll get a rather important blow, and it will work higher into November. Otherwise, we're really kind of lacking both bullish and bearish information right now, and I think it's wiped out the August rally that was a bit ridiculous and overvalued, and it just feels like this could actually turn out to be somewhat of a buy here going into November. Manage your risks relative to others. Thank you.